start recording. Welcome to Virtual Investment Club of Sacramento. We have several guests attending our meetings tonight. Welcome, guests. So we will give you a chance to tell us who you are, where you are located at the end of the meeting. So BetterInvesting is a nonprofit educational organization that teaches individual investment clubs how to employ fundamental analysis to become successful long-term investors. Our club is a stock investment club. Our mission is to provide a supportive environment for all members to learn how to research, analyze, and invest in quality growth stocks over a long-term investment horizon. The stocks we presented today are for educational purpose only. At the end of the meeting, we will ask our guests what you think of the meeting and or if you have any questions. Enjoy the meeting. Meeting minutes approval. Last meeting was recorded. There was no meeting minutes approval. Before that, go on the treasury report. I want to say we have a full agenda tonight. We do our best to keep our meeting to end on time. So, treasurer's report. Joanne, could you please show us the screen for our portfolio?
Let's see. Is Roy giving that? Roy, did you want the Morningstar up, or did you want to use what you're using?
We should use Morningstar. And to be honest, I have been too busy to look at it since our meeting. So hopefully Tom entered our last stock.
Oh, sorry. I need to.
That's okay. You typo. Yeah, it's quick. It's just yeah. Oh, well, since you're typing, I just want to talk for a few things. One is that I mentioned we have a full agenda. We have 2 annual reports, 1 quarter reports, and stock studies. So we may take out business portion of the meeting out of tonight's meeting, but I have sent out the meeting minutes from the executive meetings regarding about make our club be a model club. So nothing will change, only just meaning that we open to public. We will help BetterInvesting organization to advertise us, and we may get free license under the board, under Sacramento area chapter board. But the board has to approve us to be a model club. So you probably will see the meeting minutes from the executive meeting we had. I have a forward you the meeting minutes. That's also on a Google Drive as well. So, all right, here is our portfolio. And can you click to see my performance? My performance was to see the returns.
Is that the right one?
No, where did it go? Where did it go?
I think it's the views.
Oh, it's your view? Okay, go ahead.
Don't we just go by how much it's above or below our $1,000 investment?
Yeah, why don't we do that right now? Because I haven't seen that chart before.
Okay.
And what this is to the visitors, if you look under market value, like Biogen is $1,074. Now, well, starting with that, we have the ticker, the current price, the dollar change. That's today's dollar percent change. But when we go over to the market value, every month we try to buy a stock, and we do it with $1,000. And so you can see right away that we've made money with Biogen. If we go down one, 5 below was our first stock that we bought, and since then we've lost a little bit of money. We've made money in HICO and IPG Photonics, and then lost some in LKQ, and then we made money in Walt Disney. The Schwab, we didn't buy. We're using that as our benchmark. So you can see we've beat the benchmark in 4 out of our 6 stocks.
Okay.
Okay,
Is that good?
that's good.
Okay.
Next time we probably want to figure out the returns. I remember there was a return, but next time you can show us.
Yeah, I have that on this view.
Okay.
Unrealized gain loss
Oh, okay. There you
on the
go.
far right corner, on the far right side.
Okay.
So unrealized gain loss in dollars and in percent.
Okay. Percent. Okay.
Oh,
So
they were covered up. I had to close my that one control panel.
yeah.
So now I
Okay.
see.
Okay. Yes. Five below is lost 10%, and the LKQ we just bought this last month lost 2%, almost 3, under 3. Okay. Sounds good. Thank you, Joanne.
Okay.
So our next portion of the meeting is education, and this meeting we will go over the quarterly report template that we just redesigned for the club, and Joanne is going to give her 5 quarter report. Meanwhile, also walk us through the new quarterly report template. Roy is going to give a Heckle annual report, and he will walk us through the annual report template when he's giving the Heckle, and then later on I will talk about Disney annual report. Okay, Joanne, the floor is yours.
Okay. I'm doing my quarterly report on 5 below. The ticker is 5, F-I-V-E. They're in their third quarter results. Their fiscal year ends the end of this month, so we'll be getting an annual report later on in the quarter. I found their earnings transcript, the audio on Seeking Alpha. I think the audio listening to the audio on the stock quarterly reports is really interesting. And then I also got the SEC 10Q filing from Morningstar, but then Jay also showed me you can easily get it through your BI site too, through Edgar. So the way the quarterly report is set up is that we put we have like basic questions that we want to answer. We have a defensive question, are the fundamentals deteriorating, and offensive questions, is the stock overvalued, and then additional information. So the fields that we use to assess whether or not the fundamentals are deteriorating are, we look at our original sales growth estimate and our EPS growth estimate. These are all from the SSG that was done in June. So the sales growth estimate is 20%, EPS growth estimate 16.9%. I did not change those. Let's see. Then we also go look at year-over-year sales growth, and those come from either the online quarterly growth trend from the online SSG, or you can get them from Toolkit if you have the Toolkit application. And actually, Jay has updated the quarterly notes, and so she has identified the actual columns in the Toolkit. So for this, for 5, the sales growth is for the recent quarter 17.6, and the trailing 4 quarters is 22%. Year-over-year pre-tax profit change is 23.9% for the recent quarter and 31.4% for the trailing 4 quarters. And the year-over-year EPS growth, 25% for the recent quarter and 28.9% for the trailing 4 quarters. I put notes on the right-hand side of the this graph showing how we come up with the different figures, and actually we have put this in an order where we have sales first, and then pre-tax profit is the second line because you use sales minus less deductions as your pre-tax profit, and then to get to your EPS you take your pre-tax profit less your less your taxes, and then to get your profit, and then you do profit divided by shares to get your earnings per share. So we've arranged our fields accordingly. Then the next section is a stock overvalued. So the current PE is 35.6, which is from the SSG, and I also pulled the industry specialty retail PE, which is currently at 44.10, and the average PE is also from the SSG, which is 29.6. Then you go from those figures, you calculate the relative value, and it comes up to 120%, or 1.20. And what we look for, this relative value can be a flag for to indicate a buying or selling opportunity. Does somebody want to say something? Because I'm just new to this, so this is my understanding. If there's better,
you're doing great.
okay, if you have better clarification, let me know. Okay, so if it's under for the relative value, so we are really looking at these figures to determine whether or not its stock is overvalued or not. So we want to find under 1.0 or 100%, which would be a buy. So at this point, based on the relative value, it would not be a buy for us. Right now, the upside down ratio is 4.0 to 1. That is based on, I updated the low price to recent market low price from 31. Because the price has dropped since our original purchase, the upside down ratio I think was going to be like 10 to 1. So I adjusted the low price to be the recent market low price. And that set our compound total return to 16.6, which is using the average forecast average PE. Now, the interesting part about this stock is that listening to the quarterly phone call. So because the
Can you guys hear me?
on that, and they Five Below said that we should see something a more positive in the fourth quarter. And looking at their results in the past, they are a cyclical company, so they do go down and then have a spike during the holidays for holiday purchases. One of the concerns I have is that looking at the SSG, there are return on equity decreasing, their pre-tax profit on sales and their earned on equity is trending down. So we want to keep an eye on that. Are you proposing any new judgment members to the SSG? Yes, I updated the low price to recent low market low price. And my recommendation is to hold. I'm uncertain regarding the management of the company. I'd like to see the pre-tax profit on sales and earned on equity start trending up. And also, they are going online as of, or they went online as of August 16th in limited states. They do not include California right now. Just looking at their website, to me it looks outdated. I think they need to have a more current presence. And then another concern is their relative value right now. So another point is that I think it's the Rocky Mountain chapter is doing a an assessment of small stocks, and they're including 5, and that's happening tomorrow. So if anybody's, I'm definitely going to be listening to that. So, I mean, this is a relatively new stock. I think it's got a great marketing um, appeal to teenagers for products $5 and below. I just think that the management has to be on point with that kind of, they really need to be selling a lot of product at that price point. So that's my quarterly stock evaluation. Does anybody have any questions about how to do this?
Go
I
ahead.
just had a comment. Can everybody hear me?
Yes.
Hello. I looked at their website, and I just wasn't impressed with the merchandise they had. You know, it just looked like I realized their price point is $5, but it just looked like junk to me, sort of like Oriental Trading Company or something. And I couldn't figure out why anybody would want to buy it.
But it's for teenagers, like probably 13 and younger. I mean, that have a limited budget and.
I'm telling you, Tom, my daughter buys junk.
Yeah.
Oh,
Seriously.
well,
The little
okay.
tiny thing, they just like to buy junk.
Just remember, Tom, somebody's junk is someone else's treasure.
All right.
Joanne, I do have one question.
Yes.
On the your comment about they've gone online, but they don't include California. Once you get online, you're open to the world. So I don't understand what it is you're talking about.
They won't ship. You can't purchase. If you live in California, they won't ship to you.
Okay.
Oh, really?
Yeah.
I know they don't have a store in California, so they are not doing online commerce. They don't do e-commerce.
No, they do e-commerce in limited states. And I don't know if that's tax reasons or maybe they're just rolling it out in a staged way.
Ah. So if I want to buy something, I cannot buy. Oh, I did not know that.
Huh.
That's
strange to me.
Yes.
Sorry?
I kind of understand they don't have stores in California because distributor, they don't have that in West Coast. But I did not know you cannot buy things. This is kind of outdated,
Yeah.
Or not able to buy.
I could buy it and ship it to you guys from Ohio.
Oh, you have? Have you been to the store?
I've not been to one.
You should try. Yeah, you should visit that store. Tell us what do you think about that store. Joanne, I was going to challenge you that store, that stock. When we doing the stock study, I was going to challenge you, but then I wanted to hear what you think about the company, and maybe we can take a look later.
After tomorrow's conference call with the Rocky Mountain chapter, I'd like to hear what their input is on it.
Yeah, when I mean challenge, I mean I was going to present a retail different store to challenge this, but I would like to hear what you said about this company. Yeah, we still can wait and see what's going on for next month or future or whatever. Great, thank you, Joanne.
Do you know how much online sales they do? That was one question I had.
No, actually not. I mean, they just started that, so I'm not sure what percentage. They just started it in the summer.
Oh, so it's probably pretty low, like 1% or something if they're lucky. Okay.
And their return policy, they don't have good return policy, and I don't know. It's not like a Zappos or a Amazon yet. I think if you're going to compete on online or e-commerce, you have to be. Although I don't know with teenagers, what do they use? PayPal? They don't have a credit card, so
they probably use the alarm.
It might be a tough market.
Yeah.
Right. So it's kind of like a general
retail stuff.
Like a dollar store. What's the return policy for dollar store? Well, people probably just like, oh, it's $1. I'm not going to return
just
it.
$1.
Yeah.
Yeah.
Just guessing. Yeah.
Okay. So, Roy, are you ready for yours to come up?
Yeah. Would you bring up my form, the annual report? Okay. This is another form we're using for, once you're doing an annual. We won't use this for the quarterly. And of course, it's the company name and ticker, and I'm the stock watcher for HEICO, and today's the 16th. Now, in the glossy annual reports from the companies, there's a letter to the shareholder by the president or CEO. This, I forget the exact date, but the end of the company's fiscal year was in October. And in December, they came out with their 10K. They still haven't issued their glossy. I spoke to Julie in the, she's the assistant in the investor relations department, and it'll probably be around the 1st of February when they actually issue that. It takes them time to, I guess, put all the pretty pictures together. So what I did to get something similar to the letter is I reviewed the earnings call transcript that they did and came up with some ideas. So they do talk about their goals and plan of action, and they've met their goals in the past. Their growth, yeah, they talk about it. We can go into more detail later, but this company, among other things, repairs F-16 fighter planes, and I did not realize that they take a lot of maintenance and there's a lot of parts to be replaced. So this has been a fairly lucrative field for HEICO. They will, later on, we'll talk about some of their challenges, which are, other companies. But they made a lot of acquisitions in the past year, and each one to, help different parts. And they seem to be putting those in, folding them into their company pretty well. What they didn't address, at least I didn't notice it, was anything about the new Trump administration and how, what, if any, changes they expect come Friday. And, I know there's been tweets about the new planes being too expensive and this and that, and that might affect this company in the repairs. It might not. I couldn't find out how big a moat they are in repairing F-16s and what other products that they're heavily involved with. But anyway, right now things look pretty good. Looking at what they have issued, like I said, is their 10K. So looking at that, I went to the auditor's opinion letter, and it's completely unqualified, which means, and without exceptions, which means the auditor found nothing wrong with the information they reviewed for their audit. I've only found in one of my stocks a qualified report, which can be pretty scary, but unqualified is good. And their letter was dated December 15th. Going on to their management discussion, this is in a way kind of similar to the letter to the shareholders, but they talk about their company and what they do and how they do it. And sometimes you have to dig for any negative comments. But the main ones I found were that they realized that a challenge for them is smaller companies can respond quicker to customer requirements and maybe offer a more attractive pricing for the work and the products. So far that hasn't hurt them, but that's a possibility. They have certain goals in place, and they've made acquisitions to help them. And their cash flow, as you'll see in a moment, has been really, really good. So it seems to be doing well. if you'll scroll down, or maybe I can scroll it down. Okay. One of the things we look at is sales. Were they up or down? And you can see in section 4 that their sales went up almost 16%. Inventory was up 17%, and accounts receivable, where they're waiting for payment, is around 12%. So inventories are increasing, and to me it's significant, 12 to 17%. But what I've noticed, like with Apple, who sometimes runs low on inventory and they don't have sales, you want to have some inventory buildup. So I'm not worried about that 17% increase. Under current assets, they've almost doubled in the year. And in cash, they started the year with 33 million or billion and 3 million, I guess, and increased it to 43. And I can't always find marketable securities, but I did with this company, and they had several in their portfolio, from bonds all the way to other items, and that's increased. So anyway, their cash flow has been really good, and increasing the cash, which will help them. It has helped them in the past with the acquisitions, and whether they continue to do that, you never know. But they obviously have their eyes peeled for good companies to purchase with their cash. Go ahead and scroll. So they have a small board of directors. There's a couple of them who actually work for the company, and then there's others from different areas. Their only female director, she's an attorney. They have a couple who are financial advisors, and then a lot of them are in the aerospace, have aerospace background, which, since that's their main focus, makes sense. They're all, older. In fact, their eldest one just died a few weeks ago. He was in his 90s. So the board is, established, but they don't seem like they're necessarily all, stuck in the past. They seem to know what they're doing. So if we could go to the SSG. I looked at our old judgments when we bought this company, and in looking at different analysts' estimates, they're lower than what we used. So I lowered the growth for sales to 10. And while normally you don't want to exceed sales for your earnings, they've been so high in the past, and including the last quarter, I went ahead and raised it a couple of points to 12. I believe we had 13 and 17, and that just, the current numbers just didn't seem to work for me for that, especially since the 10-year growth is 12.4. Let's see, let me find HEICO on my thing. The 5-year, even though it's 12.4 for the 10 years, the 5-year growth is 10.7 for sales, and 15.2 for 5-year EPS growth. So I gave credit for what they've done, and but cautioned it with a couple of the outstanding estimates. He came up with a 10 to 12. And if we can go on, go ahead and scroll down. The pre-tax profit is done quite well. The earned on equity is sort of flat. It looks like a mountain, but it's in orange, but you can see it. The 5-year started at 13.7, jumped up to 17, now has dropped down a little, 16.6. The average is 16.5. But it seems to me that this is an industry that may happen with. So I'll watch it, but I don't see a problem there. They've increased debt, and part of that is, I think, due to acquisitions. Go to the second page. You can see the PEs are quite high. The high PEs are in the 30s, and the low PEs are in the 20s, except for that 1 year that's 19.5, so that's essentially a 20. What I did, even though I had a 12 and 25 for a high PE is more than double. Normally you don't want to go more than 150. I felt this company performance entitles it to a bit of a stretch. So I gave it 25 times the $4.04 earnings for $100.90 high price. For the low price, comes out, I used the average low of 22.2 with a trailing 12-month low earnings per share of $50.80, but I actually selected the recent low price, the 2015 low, and as you can see, that gives an upside down ratio of 0.7 to 1. It's getting pretty close to the sell, and the price has gone up a bit. We've made money, and I was considering tweaking this a little bit and recommending a sell, but the repair work that they do, that they're making a lot of money on, I don't see that ending anytime soon. F-16s are more delicate plane than I ever thought, and I don't see things turning badly. And if they, some of their acquisitions this past year, if they pan out, then I think the company will fool the low estimates and come back. I just wasn't convinced enough to go ahead and give them the high estimates, but I think that's certainly on the horizon. So while it looks low and the return is not great, go to section 5. That looks, really, really, really low. 4.4 for the average PE, 5.5 for the forecast high PE. But again, if those acquisitions that they've made last year pan out, I expect the stock to jump, and we'll have these would be considered very conservative numbers. So my recommendation is that we continue to hold it.
I have a question about the high PE. So you selected the future high PE of 25. Is that correct?
Correct. That's because the average is 33.8, and to go with an 18 just seemed like it was
but
foolish.
The stock has sold for high PE of over 30 for the last 5 years.
Yeah.
I can't figure out why the high PE is going to go down 5 points. It just seems to me like 30 would be a more reasonable number because
Well,
just
it
based
might
on
be,
history.
but then that would be 250 times the growth projection for earnings, and I just, I hate to go beyond 150, and that just seemed like really extreme. But if you were to do the SSG and come up with that, I would probably not say it's unreasonable. Because, like I said, I doubled it because of the fact that the PEs are so high. It's just that you can see 5 years ago the high price was 39 and now it's 75. Last year, I forget what it is today. If you could scroll up just a hair.
Today the market's closed.
But wait, Friday. So would you scroll up, please? So
yeah.
See, it's 78 is the current price. That I mean, it's been a big push. So will it continue to be at that? I don't have a crystal ball, but that was just my concern, and so that's why I picked that.
I would place more weight on the historical high PE over the last 5 years than the PEG ratio.
Okay, that's valid.
Lloyd, can you tell us about your guideline again? You said something about your high P, reason why it's 25 is because you time 1.5 times the high projected sales or earnings per share?
Earnings per share projection. Normally you don't want to go more than one and a half times that, or 150%.
Okay. Now you're talking about the PEG ratio, right?
Yeah, that's when like you have a high flyer and you pick 20, you stay with 30. You rarely want to project more than a growth rate of 20%, which means you normally don't want to go more than 30. In fact, like Doug Gerlach just refuses to go beyond 30 for the high PE, no matter what, and that is over history. It's rare for a company to maintain that. For this company to do that for 5 years is outstanding. Can they do it in years 7, 8, 9? I don't know, and that's why I was a little troubled. But I went out of my comfort zone to give them the double, more than double. I went from 12 to 25 for the high PE. But Tom has a valid point. If you went strictly at their 5-year history for the high PE, you would come in with 30. Or
Yeah.
I just myself, I'm a little more cautious than that, which is unusual for me. But
okay. So you were saying the guideline if you 1.5 times 12, then will be 18. Then
correct.
That's why you gave 25. Okay.
Yeah, I mean, as I recall, that actually comes in lower than the current price, which makes 0 sense. So I felt I had to stretch some. I just wasn't as willing to stretch as far as Tom is suggesting, but I can't say Tom's wrong.
Yeah. Is that the guideline, is a BI practice, the guideline that for the earning per share no more than 1.5?
I believe so. That's certainly what they've been teaching for 40 years.
Okay.
25 years that I know of.
Okay. All right.
Roy, this is Carol Clemens. I just wanted to back you up because I think one of the other things that you have to take into consideration, and one of the things on which that guideline is based, is the fact that we do have an economy that varies through highs and lows. And in a very real sense, we have been in a high open market in the last 5 years, and whether or not that can continue historically, there is some very strong question. So we're kind of looking at the possibility of recession, and if that does happen, then your choice of the lower PE is definitely going to prove to be very prescient.
Yeah. Well, thank you, Carol, for your comments. Yeah, I appreciate your comments. For our guests, could you please state your comments during the guest portion of the meetings? And thank you for that, Carol. So I also want to mention one thing. For giving annual report, a new SSG is required. For giving quarter report is not necessary, but you still need to evaluate, but not necessary if you don't make any changes. But for annual report, it is required. Okay, so any other comments, questions for Roy about Heckle?
Are you ready to go to yours?
Yes, I am ready. Okay, I'm going to talk about Disney's annual report. The letter to shareholders, Disney has not sent out the letters yet, so I'm listening to the transcript as well. And I don't know when they're going to publish. I looked at 2015. They do have it. Based on the transcript, yes, they met their goals. They have a plan in action. They talk about their growth. Anything they left out and not mentioned, I don't think so. I felt very positive and confident for this company. Auditor opinion letter. I don't know if I'm supposed to look for the word unqualified, but based on the auditor letter, everything is accepted. For management decision analysis, looking at a competitor and the challenging thing facing the company, yes, they do have a few challenges in the competition. The one thing is about they are multi-channel video programming distributors. Because of a number of online services has resulted in increasing competitive pressure for advertising revenue for their broadcast and the cable network. Also, for the company's media networks business, they also compete for the acquisition of a sports and other programming, and particularly in live sports programming. And the last but not least is the internet websites and digital products compete with other websites and entertainment products. They also, there are challenges. So what does company say about their future? And I felt that 2017 will be as strong as like 2016. There are several reasons. One is the Disney Paris. They are going to developing a village nature, a European eco-tourism destination adjacent to the current resort, and which is targeted to open in 2017. A new themed area based on Marvel Iron Man franchise is expected to open in early calendar 2017. And the third hotel in Hong Kong Disney Resort is under construction and expected to open in 2017 as well. And also, they are expecting to release 8 of their own produced feature films. I believe the company can meet their expectations for the future. Looking at their sales. So because Disney is a giant company, obviously their sales is not in double digit because they grow a little bit slower. The sales is up to 6%, and the inventory is less than under 12%. They signed a few contracts is 11%. So inventory increasing not significantly faster than sales, no. But account receivable increased significantly faster than sales. I said yes because it's relatively 11% versus the 6%. 11% of account receivable versus 6% of the sales. I say yes. Current asset more than current liability, yes. Their current ratio is 1-to-1, so which is good. And the statement of a cash flow, cash increase or decrease during the period has increased. Total for their cash has increased. They don't have any marketable security for Disney, and so total increased for the cash is total increase overall. Cash by operations and net income. Yes, net cash provided by operating activities equal or greater. Yes, it's greater than net income. Any thoughts on director or officers? Is the background diversified, experience, age? One thing I noticed, the management team is all Caucasian. They are age about 54, 65. The CEO is 65. He's very enthusiastic CEO. I like his presentation. CFO is a woman, and there's a legal lady is also women. Wait, is it? Yes. Oh, wait. No, just the CFO is a woman. And so they are ages diversified. I don't know what's the retirement age. Consider the CEO is 65. I don't know if he's facing retirement. I think he has been CEO for what, 8 years or longer.
I think he's supposed to retire in the next couple years. I was wondering, do you have any info on that or not?
No, I don't. But I will definitely keep an eye on it and who will be the potential new CEO for the company. Okay, now let's take a look at the SSG. For the SSG, Tom initially presented this company, and because he mentioned that he has owned this company and had a very good return, he gave projected a sales of 7% initially. So personally, I will usually my projection will never higher than the historical growth. But however, Tom has some confidence in that company, and so I capped 7%. I try to see what does the company themselves to say, but they really didn't mention any numbers. I just kept the 7%. But however, for the historical earnings, I made some changes. I'm using the default preferred procedure because I like the preferred procedure using the income statement. The data was pulling from the income statement. I like that. Pre-tax profit, yes, that's the one. I'm using the default. I made some changes in adjustments for current diluted shares outstanding, but I decided to use the defaulted values anyway. Pre-tax profit is up, return on equity is up, the debt is up as well. So I kind of looked their annual report, understand about their debt. So it sounds like they like to borrow money. They do have cash, but they like to borrow money to financing for their constructions, for example, for the Disney Hong Kong. I was looking at my notes. I can't find. Excuse me, I messed up on my notes. They like to borrow money for their building the new constructions. For example, like they are opening a third hotel at the Hong Kong Disney Resort. So they have some sort of debt in that area. It's not really about acquisition or anything, but it's the borrowing perspective. Second page, please. Valuation. Second tab. So for the high PE, I give 19, and the current PE is about 19, and the average is 17.3. I just gave a high PE of 19. I think this number did not change as we initially the stock was presented as a club agreed number. And I believe Tom was giving us a bit higher. I believe it was 25, but we as club we agreed for 19. I just used that number. For the low price, I kept using 80. What I use? Can I see the 52 weeks low? I can't remember what I have for the 56. Can you go up a little bit, Joy? Oh, 86. So I'm using the 52 weeks low price because I felt like a forecast low price a bit maybe too low. So I'm just using the 52 weeks low. And currently the stock is in hold. Upside down ratio is 1.621. I think definitely we should hold on to, recommend to hold. I do have confidence in that company. And after Tom presented, I finally bought some Disney myself, and it does well. So, okay, any questions about Disney annual report?
Can you hear me?
Yes, I can hear you, Joy.
Okay, so this gives us on the SSG, it's like red, 6.9%.
Yes.
What does that flag for? Is that we should be targeting a higher percent?
That's a really good question. Anyone knows why? Is that we were targeting, I think was anything under 10 will be red?
I don't know where the zones are. Isn't there some sort of a page that where there's like looks like a thermometer, red, yellow, and green on the SSG? That it might be because it's there, but 6% is if that's the best we could do with the high PE, we might want to look elsewhere.
Yeah. Right.
Is that what you're talking about?
Yes, that's what I'm talking about.
But for the gigantic company, will you ever get anything greater than 10? Tom?
Sorry, I didn't understand the question.
I'm saying for this size of a company, mega size company, will your returns ever greater than?
With the high PE, quite possibly it might come out that way. Maybe if you go with the average,
okay.
But I think if you look at I don't know, like in Manifest Investing, I think I don't know what his MyPar is, but I think he's the market he probably is projecting like 5, 6, 7, 8, so somewhere in there for the market average, maybe higher.
Yeah.
If that's the best we can do with the high, that's not great.
Yeah. Well, this will be an opportunity for February stock study folks to take a look, maybe challenging Disney, see if you can find something that the size of a company or a competitor or something.
So I have a question about challenging.
Mm-hmm.
Do you have to find a company in the same industry, the same size?
For challenging, supposedly you're challenging with same industry, yes. But I remember correctly when Roy looked at a few competitors along with Disney, I think Disney was the best bet at the time.
I know, but when you challenge, do you have to use the same kind of?
Normally, you should use the same industry. Whether or not it's the same size, I don't think there's that sort of restriction.
Okay.
But there are times where the industry isn't all that great, and if say Disney's the best of the industry and this is the best we can get, then you would branch out and find a different industry and swap it out.
Okay.
But typically, the old challenge tree, where you actually took into account the cost of selling stock and purchasing new and taking into account taxes, there you pretty much should be using the same. You use the same criteria as much as you can, and preferably it's the same industry. But I don't consider that a hard and fast rule if there are such things as rules.
Yeah. Okay.
I think as long as, if you can't find something in the same industry that you like better, as long as we try to have the goal of having a diversified portfolio, if you find a good stock, I think it's reasonable to bring in just about anything.
Yes, agreed. Yeah.
Okay.
So definitely it's an opportunity for for February. Someone can have a look.
Are you ready to do your next?
Yes, I'm ready for the stock study. So Barry and I are going to present you semiconductor industry. And I want to first start with talk about why we picked this industry. So we did review our club portfolio, try to find something that currently that not in our portfolio. So if you scrolling down, Joanne, the bottom part will tell us what sectors we don't have. So we looked at financial services again. I looked at banks. We looked at banks, and we looked Visa, credit cards, and just going down in the left corner, it tell you what sectors that we don't have. So we try to find the quality companies in these sectors that we don't currently have. So nothing really turned out good for us. And I said, okay, what else can we talk about? Personally, I own Skyworks, and I understand Skyworks did not perform well in 2016 due to Apple. But the company has shifted their business from mobile technology to Internet of Things. Plus, Trump has met, these giant tech executives. Skyworks has produce their products, and then for some of them, the company, for example, like Google, Facebook, Netflix, a lot of them that are very well known companies are Skyworks customers. So we decided to give Skyworks a try, and then do the deep dive of research, and then try to find the competitors who are equally as good as Skyworks. So we looked a few of them. We looked through value line to look the preliminary SSG. Want to see the graphs look as good as Skyworks. So we found Taiwanese Semiconductor company. Actually, it is this company also under quality screening on the BI tools. We looked at analog devices. So finally, we decided to present Skyworks and a Taiwanese Semiconductor company. So Barry is going to talk about Skyworks, and I have to say, this is Barry's very first SSG and a stock study. She is our guest, and she has observed our meetings, and this is her very first. I have to say she did very well, and tried to catch up, but the terms, terminologies, all that. So I'm going to co-presenting the Skyworks with Barry. Just I may chime in, we divide and conquer some parts of our presentation. So Barry, I'll let you start with talking about Skyworks and how does the company make money, and first cut. Okay, Barry.
Okay. Hello, everyone. We chose Skyworks Solutions. Skyworks is an innovator of high-performance semiconductors. Last year, it had 30 to 40% of its business was with Apple. And this year and forward from here, they are looking to diversify into the Internet of Things, connecting with automotive, broadband, cellular infrastructure, the connected home, industrial, medical, military, smartphones, tablets, and the wearable market. Their technology can be found in things like Nest smoke detectors and thermostats, Honeywell's alarm systems, Sylvania's wireless lighting systems, Amazon's streaming media platform, and Sonos audio systems. So all kinds of things that are connected within your homes. Skyworks has teamed with Libre Wireless Technologies and LG Electronics to deliver advanced products through wireless audio, smart home appliances, and the connected automotive industry. Some of the connected automotive industry would be, in your car, collision alerts or collision avoidance systems in the cars. They also forecast a revenue boost with mobile users upgrading from 3G, 4G smartphones, as the 4G devices require more of Skyworks analog chip technology more than the 3G devices. So that's some information on the Skyworks as far as where they are in our economy of where their business goes. I couldn't really find a breakdown of exactly what percentage of business, other than that 30 to 40% that was Apple last year, where the rest of it was, other than they were saying that they were trying to go to Internet of Things. But as far as is this a high-quality company, the sales and earnings have grown strongly and consistently over the past 10 years, with a historical sales growth of 19.7% and a 10-year historical EPS growth of 32%. So this company, with increasing pre-tax profit margins and return on equity and no debt, shows that this company is a well-managed company. And then, let's see, we also, the projected growth rate for sales was 15%. We decided this, we took the average of 5 analyst projections, which was 15% growth. On value line, it was projected 20% growth for the next 3 years. And the growth rate for earnings per share was 7.5%, and we used the default procedure growth rate for that to get that growth rate. And I believe, Jay, now we decided that you were going to take over at this point.
Yes. So for the high PE, we decided give, actually, Joanne,
Yes.
Can you refresh the screen, because the current price is January 6th. It's supposed to be. Can you refresh data? I thought I updated it with a new SSG. Yeah. Second bullet. Sorry. It's just override the price. Oh, can you go to second tab? No, I mean valuation and the return. Just want to see the stock prices after. Yeah. Okay, so actually I changed the high P to be 21, not 20. I just want to point out. Okay, so average high P is 23. So current P, I like to see current P ratio is lower than average price earning ratio. As mentioned before, I learned this from Avi, was saying, the current P needs to be below the average P, is meaning that the company still have some expansion. So I just gave a couple points lower. We just gave a couple points lower than 23.5. Let's see, if we're using 1.5 times 7, that would be way too low, right? I'm just trying to think about using the Roy's guideline, which I normally don't. What I just kind of look is, I always use that judgment, is just look at the PE, see if they're consistent, take out the outliers, all that. So I don't think we tried to take outliers on 2012. But there's 2015 was about 27. Even though you take them out, the average PE was about 20. So I felt it's okay to leave as 21 unless you guys have some objection. Low PE, we're using 11.5. That will give you low price to be 59.6, which is a bit higher than the current 52 weeks low. So I felt that I prefer the low price is lower, not higher than 52 weeks low. So we chose 2016 recent low price to be 54. And that gave us the upside down ratio of 3.2 to 1. And the return, the high compound return, can you go down a little bit? The return is, this company also paid dividends. The return for using the high PE is 15, using the average PE is about 10%. So This is the SSG. Do you guys have any questions about this company? I bet that a few of you own this company. I know, Roy, you do, unless you sold it.
I hold it. I have some.
You have
Yeah,
some
I still
content.
have it.
Yeah. So do you guys have any questions about SSG so far? I have a confidence in this company, and especially about Internet of Things. You know, for this Christmas, we got a few smart things. Now I don't need to turn on the lights. I walk in the door, the lights is on. I can tell Google, say, hey, Google, you know, we are using, you know, artificial intelligence. We're using sensor. I have a Nest. So learning what temperature we like in the house, all that. So I felt there are a lot of there are markets for smart things or for Internet of Things. I felt the car can be smarter. You know, as you or probably already noticed, if you recently bought a car, the car has a sensor, right? It will beep you if you cross the line. And I felt there are a lot of things can improve in our life in this area, in this chip market area, wireless chip market area. So I don't know, I still have some confidence in this company. So that's why we recommend this company. And would you like to hear the competitor?
I have a question.
Sure, Tom.
About the stock selection guide.
Uh-huh.
You just went to the whatever default came up in this this online SSG to project your future earnings growth. Now maybe I'm sure this requires a big discussion to figure out how we're going to handle this.
Yes.
But you know, you went to that default, and it, you know, like, it may not be unreasonable, but it seems a little crazy to me that we're projecting 15% sales growth and only 7.5% earnings growth. So I mean, like, what is it about the future of this company?
Okay.
Are their margins going to fall, or just what's happening? Why is it coming out that way?
Okay. So the reason why I liked personally starting liking using preferred procedure is that these except the forecast, the other things, the numbers, the preferred procedure numbers is driven by was from the income statement. I like that because the income statement is a fact, right? We cannot deny that. So we just look the judgments. I just looked one by one just to see, okay, what's the pre-tax profit margin the last 5 years? Just anything needs to be changed. The only thing we were going to judge a change in number was the shares outstanding. So Joanne, if you look diluted share outstanding, the blue tab to the right, the bottom right, yeah. So I don't understand is that where does 188 came from? So I will try to use the 2016 number, but then I decide not to. I'm guessing, oh, maybe they are using average. But if the last 5 years average will be 190, so we still have some study to do. But regardless if it's a 190 or 188, it's a marginal number change. So that's why I decided to keep it as is. So what number would you prefer for growth rate, Tom?
You know, I really don't know. I haven't, you know, studied the company that well much recently, but it just seems odd to me that we're projecting the earnings to be half of what the sales growth is. It just there's a disconnect there. You know, they should be closer together. Maybe sales should be like 10 or something rather than 15. But I guess if you lower that, then it'll lower it even further. But the numbers just, I don't think one should be double the other.
Okay.
Jay?
Yes.
What does Value Line have for their 3-year estimate?
20%.
For the earnings and the sales?
Oh, sorry. Earnings and sales. Let me have a quick look. So for this, let me have a quick look. I do have a Value Line. Let me open up. Well, you can open up too. Let me have a quick look. I don't remember in top of my head.
Well, don't worry about it. I was just curious.
Well, you can, yeah. Let's see.
I can do it.
Okay. So everybody can see it. Projection return. Okay. I'm looking at earnings, 12%.
Oh, okay.
12. Yeah.
Is it in here?
Yes. Earnings 12%. So I kind of makes sense to me when they and Kunias was saying that the preferred procedure was driven by the income statement. That's why I kind of start using that. Of course, myself have a lot to learn about how to make a judgment. So anyway, Roy, do you have any comments on that earning per share?
Yeah, I will look at the preferred procedure, but I don't have as much confidence in it as headquarters.
Huh.
I've seen it like this where it comes in really low. I'm always shocked when a couple of mine that I ran last night. They came out the same or even higher than sales, which floored me.
Yeah, if that's the case, I won't use it. Yeah, I have run into that.
Well, actually, I will use it then because, because if based on what they have as the expenses and everything, it comes out fine. Here, I think maybe they're overstating the expenses.
Okay.
And that's why I would be a little bit. I mean, I would want to compare what other analysts do, and they all seem to be up around 12 or so. I would dig into why they were higher than the preferred procedure, and I probably would, go higher, whether it be 15 and 15, or if I would, 15 and 10 or 11 might be. But
okay, so can you move up a little bit? I just want to see the graph for the expense. Move up just a little, the graph. Yeah. So I want to see the whole. Yeah. So
you can see that the expenses are narrowing.
Yeah, narrowing.
So and that wasn't taken into account by the preferred procedure. If it was going the opposite direction, then
they are pre-tax profit is growing faster than sales. So Joanne, can you move this pink line overlapping with the green, and then align the first? Yeah, move up. So the first year, 2017, overlap with 2017 green dot. Keep going. Just the first year overlapping together. Move up.
Like that?
Up.
Well, that you don't have to. That tells the story. It shows that they've worked hard at cutting expenses.
Yeah, that could be. Oh yeah, another thing about this company though, it's a not large company. I think now it's a medium size. I forgot. They have like only 7,400 employees. So they have employee. I was going to write it down. Now I forgot. In Mexico, in Japan, in Singapore. So they also work on the R&D stuff. When you say cutting expenses, yeah, it could be. Yeah. But anyway, so do you want to try?
Why don't you go back to the preferred procedure again?
Okay. Well, do you want to change the number to something higher?
Go to preferred procedure. So take that expense and knock it down to 20 and see what you get.
The judgments, second one, less expense, yeah.
Yeah, change that to 20 and then update study.
2.3. Yeah, 2.3, way too low.
Well, that doesn't make sense.
That doesn't make sense. So what are you? Okay.
You're decreasing the expenses and.
No, I think that's pre-tax profit margin. So if we're going to decrease expenses, we want to make a higher pre-tax profit margin.
Oh, is that what that is?
Less expenses.
So what would you change it to?
Oh, more expenses.
So 40?
30?
Put in 40 and see what happens.
Well, according to, I'm looking at Toolkit, last year's pre-tax profit on sales was 36%.
Yes. So, Joanne, if you click pre-tax profit margin, the blue thing, yeah. It was a 36, yes.
So why don't you put 30 in there and see what we get?
Yeah. Well, the reason why I didn't change because it is the 5 years average. That's why
Well,
I did not use 30.
just for fun here, let's
Okay.
see. So update and see what we
Yeah, but
get.
see,
11%. 11%.
yeah, that's closer. If you go back to that chart,
Yeah.
you'll see that years 4 and 5 out were really low, and they've done a huge job. Go to pre-tax profit margin. You can see it. Last year was 36,
Yeah.
but in 2012 was 16, and 2013
Mm-hmm.
19.
Mm-hmm.
So I consider those now outliers to what they're able to do now. You know, you want a company that's growing their margin, and this one
Right.
obviously has been
Well,
doing it.
maybe their
Must be some
product
reason.
mix has changed. Maybe they're selling more profitable products now than they were a few years ago.
So do we want to change that?
I
would
think
like
it's worth trying because they're not getting credit for how well they performed the last 3 years, and I'm more worried. I'm more interested in the last 3 years than I am the prior 10, prior 7 years. So.
Yeah, I agree. I think it makes sense to put heavier weighting on the more recent performance.
Okay. So
it may not continue, but
right. Okay. So with the high P, are you okay with 21? Do you want to change it to 20? Take out the outlier for 2012 and 2000.
Well, if I were doing it, I would go to 20, but I'm not
let's go 20
wedded.
because now you increase the earnings. Yeah, let's see. The high P change to 20. Yeah.
See, it's still a 4 to 1.
Yeah.
So I think that's good.
Okay.
I like this SSG.
Okay, can I take a look at the current price? What's the current price? I forgot. Can you go up? It was $78 or something? 78. Okay. All right. Okay. That's fine. Okay. So that's a Skyworks. Let me quickly talk about Taiwan Semiconductor Manufacturing Company. This company is a competitor. They actually very interesting. This company also was the world's first dedicated semiconductor foundry, and it's still the leading company in its field. Something I learned about this company is that Apple actually is their major customer as well. According to the Apple Insider website, said the Apple chip manufacturer for this company has reported say they received the first design for chip using terminology 7nm FET process in the second quarter of 2017. So they produced something that very similar is a semiconductor. But this company, historical, I don't think they are as strong as Skyworks overall. They are fairly consistent over the last 10 years. Historical growth is about 13%, and the earnings is about 12%. So they have a pre-tax profit is up, return equity is up, but their debt is up as well. For the debt for this company, by the way, this company is based in Taiwan, and their debt is related to investments in debt securities such as corporate bonds, government bonds, and some long-term debt. So it's nothing to do with acquisition or anything. It was just some the securities that they have. You can go to the second page. Oh, sorry, not yet. Sorry. For projection, we are using 13 as the high PE projected sales. Only I'm using this is because I I was looking at analyst projection. They project this company average was about 15% growth rate, and Value Line project a 17% return next 3 years. And I decided to just keep it as historical, align with historical sales. And historical earnings, I'm using 11.8, and again, I'm using the default preferred procedure. I did look at, they are just to see. I tried adjustments. It seemed like the number align. I looked each of them like. Can you click diluted share outstanding, the blue tab? See that they were using 5186. So I don't know why Skyworks is using 188 million. I don't know what that number came from. So I want to ask Ann Cunez, or I want to do some research on myself. So the numbers are pretty aligned up, the default with my judgments. I did look at tab by tab. So I come up with 11.8. Okay, second tab, valuation return. I gave a high PE. They are PE, high PE pretty consistent. I just give them 15. And you need to refresh the stock price as well, Joanne. Can you go to data? And then just data. Yeah, second bullet. That works. So they are. Oops. Oh yeah, there you go. 29.44 is the current price. I'm using 15, and the high price is 47. I'm using low. I'm using average low 11.2. So it come out as a hold. But even though this is a competitor, I just want to find something to persuade you guys, to show you guys that how the competitor, works, perform. And we even looked at Intel, Qualcomm, and analog device. Nothing really can compare with the results. Nothing can compare with the Skyworks. This is the best I can find, and it come up with a hold. So, any questions?
Well, since we're not, I don't think any of us are going to vote to buy this one. It really isn't that material.
Yeah.
But if you were, I would really grill you on the estimated earnings and ask why the analysts project a negative earnings.
Analysts project a negative earnings. Where?
Where are you seeing that?
Right there. Analysts 0 minus 0.2.
Oh, yeah. I don't know. I usually don't look at the analysts. This is just 2 years. I normally don't.
They have more time to spend than we do to dig into the books. So
yeah,
I would, I'll give it an eye. I don't follow them, but I certainly consider them. And when they're when they're saying negative, I want to know why.
Yeah.
So, like I said, we're not going to buy this, so it's no big deal. But think of that for future stocks.
And analysts tend to be positive, so that's
right. That's interesting. Yeah. Joanne, can you look can you X out this? And there's another analyst on the behind the background. I just want to see is there analyst estimate as well? Yeah. 2-year estimate. Are those analysts long term? Okay. I don't know. 2-year estimate. But I looked at 5 analysts that from the BI side, they give pretty high. Let's see. Yeah, about 15%. They'll give 15% for 5 years for long term. I'm not sure how long term. How do they define long term? But
what do you mean the BI analyst? BI doesn't have analysts.
Not BI analyst from the BI website. You go up. They have a. Can you go up, Joanne? Move up the cursor. Yeah. Go to research and analyst estimate. So I just pick Yahoo, Zach, Morningstar, MarketWatch, or whoever, NASDAQ.
Okay.
Yeah, from those.
Okay.
Yeah. Okay. So, discussion of a possible buy or sell actions.
Oh, I move we buy Skyworks.
Okay. Anyone second the motion?
Yeah, in our other club, I forget, I think Tom did Air Lease, and same month I did Skyworks. We bought both.
Oh, okay.
First time ever. But that was a century ago, right, Tom?
Well, more like 2 or 3 years, but it seems like a long time. You're right.
Okay. Anyone second the motion to buy Skyworks?
I second.
Are we at the voting
Yes.
yet? I thought that was coming up.
It's in your email. Okay.
I know, but I thought that came later in the program on the agenda.
That's two votings. One is voting for the member. One's voting for the stock.
But both I thought were later on. I'd have to see the agenda again, but I didn't think we were ready. I mean, maybe we are.
We are ready to vote for the stock. Yeah, there are two different voting.
We're running short on time, too.
Yes, I'm going to go very fast. Okay. So did you find that stock voting form, January 2017, and you vote one buy, one sell?
Okay,
or if you don't have anything to buy, no sell, you can say other.
Well, let me find it here.
We don't have any motions to sell, do we?
No, we don't.
Phooey.
Or you can go to the invitation to have a look. Joanne, are you going to are you going to count the vote response? Three. I sent out the voting form through email this afternoon. Also, you can go to your invitation as well.
Okay, we have 4 responses.
Yes, 4. Who else? How many total do we have? 6? 5?
I think 5.
5. Okay, missing one. The person.
Okay, Jane.
Yeah.
I vote to buy the Skywork, and for selling, I don't have any opinion, so I'm going to say other. I don't know how to email. Should I email you?
No, just say submit. In the bottom, there's a submit. Just click submit.
Oh, okay.
Yeah.
Okay, I'm doing it right now.
Okay. Okay. Are we still missing one? Did you submit, Manan?
I did.
Okay.
I did.
So there's, okay, there you go, 5. Okay. So motion has been moved and second, and we are going to buy $1,000 of Skyworks for the next, in the next day open market price.
Yep.
Okay, good.
Sounds good.
Okay, so we are going to not to talk about the business portion of the meeting, but I would like to open the floor to our guests. So let's go one by one. And guests, please tell us who you are, where you are located, and if you have any questions or comments. So Anna, you first. Unmute, Anna. Oh, sorry, Joanne, you have to unmute her. Let me unmute her. Okay. Oh, she's, I just unmuted her. Okay. I
still show a muted mic.
Let's move. Okay, there you go, Anna. So what do you think I will meet? Any questions?
Okay. No, this is very interesting on your annual report. Your presentation on the annual report is something really educational for me, so thank you.
Okay, you're welcome. Anna, this is your second meeting, observable meeting. Are you interested to do a stock study with us in our next couple months?
Sure. Okay. Yeah, I was thinking of that. Yes. Okay. Happy to.
Okay, great. Barry, you have observed 2 meetings and you did 1 SSG. Are you interested in joining us, or do you have any further questions, comments?
Yeah, I would like to join you.
Okay.
I have a lot to learn, but at least I got part way through.
Okay, we will vote you at the end of the meeting when everybody log off. So caller number, okay, thank you, Barry. Caller 01, whoever the caller is. Can you tell us who you are? Caller?
I don't
You're on
see
a telephone.
that anywhere.
Okay. So, all right.
Whoever's on a telephone.
Yeah. Let's go. Carol. Hi, Carol. I know you probably have a lot to say. What do you think of our meeting, Carol?
Hi. Well, gee, the only thing that I would try to do would be to limit the number of things that you try to do at one meeting. It just seems to me that trying to do your 2 reports plus review a stock is probably pushing the limits of your time and the amount of time that's available to both discuss and to learn. So
I have to agree with that. We have thought about to eliminate and to allocate a specific meetings for quarterly report, annual report. The only reason why we decided not to do is because we invest in hypothetical money. So we thought that we would like to know what if something wrong with the company. We would like to hear when the earnings is available. That's the only reason that we decided that we cannot wait any longer. We want to do it. So I have to agree. Yes, it is a lot of material to cover.
I would suggest that
Carol,
you
we
might
just started
consider
this in September, so we're still feeling our way through how to do our meeting.
Yes.
You know, I would suggest that you might consider using your communication tools in between meetings so that you could alert one another if a stock that you're following has problems, then it moves on to the agenda. But otherwise, why waste the time if it could be better used in other ways? That's one of the things we learned is just, you know, there are certain things that you don't have to know. You just don't have to know that it's hold.
Right.
But you do need to know when it's a possible sell.
Yes. That's really excellent.
That's my observation just listening is that I would have slowed things down in some of the discussion areas because I thought that there were points being made that were very valid and that needed emphasis. And your annual reports, your quarterly reports should be pretty much pro forma. Unless there's something really new or different that comes up when you're examining those, they ought to just be put someplace where everybody can read them before the meeting and not worry about them.
Yeah, good point. Yes. Okay.
It'll save you a lot of time.
Yes, definitely we will take your comment into reconsideration how we follow or present our quarter and annual report. Okay, to make our meeting more efficient. Okay. Well, thank you, Carol. I appreciate your comments.
Sure thing. Enjoyed tonight. Thank you for inviting me.
Oh, thank you for attending. Okay, Diane?
Hi. Do you hear me okay?
Yes, we can hear you.
Well, thank you for inviting me as well, and I apologize for not getting in until when the meeting was halfway over. So I missed the whole beginning, and but what I heard and saw, I thought you all did a fabulous job, and I look forward to coming to another meeting and seeing if this would be something that I would like to participate in the future.
Oh, great. Thank you, Diane. Mm-hmm. Also, I want to point out Diane is our director for the Sacramento area chapter. She is our distinguished guest to visit our club and to report to the board, see if we can be considered as a model club. Okay. I hope you say good things about us, Diane.
Absolutely.
Oh, thank you. Okay,
You're
Henny.
welcome.
Okay, thank you. Henny, you are next. Henny is from Canada, by the way.
Yes, thank you very much. Thank you for inviting me. I thought it was very informative. I had some similar comments, I think, to Carol, just regarding the timing and possibly if some of the material could be distributed in advance so that you have more time to digest the information and then make comments. But I thought it was a really good discussion, and I learned a few things.
Okay, great, Henny. Thank you. Okay, Jane from Hong Kong or Taiwan. I don't know where you are, Jane, these days. You are next, Jane. Unmute.
Jane, can you hear us? You need to unmute.
Actually, she sent me an email. She sent me an email before the meeting, and she asked me if she can do a. She also has observed the 2 meetings with us. She asked me if she can participate, do a stock study, and I said yes. So let Jean figure out mute and mute. Meanwhile, Susan, next one. They have one more guest. Susan, so what do you think about our meeting? Unmute yourself. Susan T. Hi, Susan.
Can you hear me?
Yes, we can hear you.
Okay. I enjoyed the meeting. I'd like to continue to attend. The time can be problematic for me, so I just like to attend for a few more meetings to see if it will work out for me.
Okay. All right, Susan. I will send you a meeting invite.
And
okay.
Susan, where are you from?
I am in Washington, D.C.
Ah,
wow.
Welcome.
So Susan, Washington, D.C. Henny is in Toronto area, and Jane either Hong Kong or Taiwan, and we're going to be Shanghai next month. And Carol is in Carol. Where are you? Chicago? No, you are not Chicago. Where?
Oklahoma.
Oklahoma! Yay! And Hannah is Los Angeles, and of course our member Matt is in Ohio. Columbus, Ohio. I think we have all over the places, even the world. Great. Well, thank you so much for you all attending our meeting. I'm so sorry the meeting went over, and we definitely, Carol, will take your comments into consideration and see how we can improve our meeting better with reports.
Jay, this is Anna.
Oh, hi, Anna.
I would do a stock presentation, but there's certain logistics. Like I have the PC version of the toolkit, and once I pick a stock, I'm not sure how I submit all the information. So do you have like a instruction, a document of what the tools that you guys use and how do you submit the value line, the SSG, and whatever information ahead of time for other people to look at?
Yes. So we and actually Jane asked the same question. I believe in your old club you do stock study as one person. In our club we do stock study pair with someone. We have a stock study committee. So you always pair with another member.
Okay.
Yeah, and toolkit is totally fine because we are using GoToMeeting. You can share your screen so someone can see your screen. So as long as you have internet connection and you with the other member can see the screen. Regarding how to upload the documents, we're using Google Drive. So for now, you don't have access. You only have access to agenda. So when your turn to do stock study as a guest, we will give you access to that specific folder so you can upload the stock study value line, all the information there. And one member will pair with you, and you guys will just sit next to each other, except that you just kind of like our meeting using the tool.
All right, I'd be happy to present a stock on Tuesday if that fits with your agenda, but you let me know who can pair up with me. I guess one of the existing members.
Yes.
So be happy. Just send me an email, then I'll get the logistics. And I think it's great to have a partner to study, to bounce ideas off. So
yes, great. So of course. So I will then let you, because Jane somehow still unmuted. I will show you email and tell you who the member will be to share with you for our February stock study meeting.
Sure.
Okay, great. Thank you, Anna. Any other questions or comments from anyone? So if you don't, I'm not going to agenda meeting, but we need to vote our new member, Barry. And for our guests, thank you so much for attending our meetings. And let me know if, Carol, would you like to attend our another meeting, or you're good?
Gee, I would love to attend meetings. I just don't feel that I can join at this point.
Okay. So would you like me to send you another invite for next month, or no?
If you would, I would appreciate it.
Okay. So Henny, Jane, and Susan, and I missed Anna, yes. I will send you a meeting invite for our, Diane too, for our next month meeting. And well, guests, thank you so much for coming, and we will send you a meeting invite for our next month meeting. Our members,
Thank you for having me.
Yeah, you're welcome. Members, please stay online because we need to vote for our Barry. So you will log off as well, Barry. I will let you know if we will let you in. Okay, bye. Bye.
I don't know how to log off.
Oh, just close the window.
Oh, well, I'm on the iPad. Okay, I'll figure it out. Okay, got it.
Okay. Bye, Anna.
No, I'm still on.
You are still on, yes. Yeah. Let me see how I can disconnect. Oh, I can dismiss you. Let me dismiss you.
Oh, thank you. Bye.
Bye.
Just close, go to meeting.
Yeah. Who else? Okay. Henny's still on. And Jane's still on. Let me dismiss them. Okay. Susan's still on.
Okay. Caller 01 is still on.
Yeah, who's caller 1? Okay.
Maybe it's a spy.
Yeah. Okay. Speak of that, I want to. Who else? Henny. I'm going to dismiss you, okay, Henny? Bye. Who else? Do we have everything? Diane's offline. No, she's offline. I cannot dismiss her. She's offline. So first of all, let me